used to. Good morning. This is a slightly different version of what do we call this? Trey Talk Weekend Charts. Um, Interesting week, a lot to discuss, and unfortunately, not a lot of time. I have the responsibility and opportunity to catch up with a couple of my friends from 35 years ago, and need to be on a train by 9:30. It's now 8:45, so I apologize if this is a little quick, but need to walk through a couple of things. Want to check and make sure my this is showing up on the screen, and it is. Okay. Key bonds on the radar screen in Japan as well. Those are the highlights, and the NASDAQ is the most important chart in the markets right now, and I'll show you why in just a second. Let's take a look. This is 7350 on the ES. I've been talking about it for since this looks like since early May, and certainly since early June when we had this test, and it firmed up here and it firmed up yet again. This is a very important level. Very important level, and as long as we hold it, it's very hard to be bullish. Excuse me, very hard to be bearish. My apologies. That's a very big different statement. Again, you can see it was tested here, tested here, tested here, tested here. This is a very, very important level for the markets. Keep it on your radar screen. NASDAQ, as I threw up, I think a week ago, maybe 2 weeks ago, the rest of the market looks too healthy to really get freaked out about this breaking. You can't ignore that it broke, and it absolutely, but I threw this up and I said, I think this is the right interpretation. And the farther that we go, I really think this is the case. As you can see, this is where we closed on Friday. Right here, we pushed above, we closed it, and here, look how significant this level is. It's 28,530, not 350, 28,530. Right here, we've pushed through it a little bit. It's a little sloppy, but it's the NASDAQ, which this is how it works. But I think this is the right interpretation. But this is what I'm looking at. If we can accept back above here, this is the obvious target, this high volume area. And you can see 29.6. And I think we could get there pretty quick. If we roll over, I think there's a real good chance we test this, which that's like 26.4, 26.3, depending on how long it takes. But that's what I'm looking at. That's how I'm playing it. But I don't know what we're going to do tomorrow. A lot of times on the weekend, it's very easy to see. I've read a lot about what's going on with rates, what happened with Japan on Friday. We'll get into that in a minute. So no idea how we're going to open at 6 o'clock, but this is exactly what I'm watching. If we can accept over here, I really think we're going here. If we can't, I really think we're going there. That's what I'm looking at. That's my bet. You can see this. This is what I'm talking about. The rest of the market looks too good. We got the NASDAQ, not the NASDAQ, but like some of the high flyers getting hit pretty hard. There's names down 30, 40, 50%. And for anyone who lived under a rock, if you didn't see what happened with King Leo last week and blew up his fund, got taken out by Citadel. And this is what's going on in the rest of the market. I think if you're not in those names, everything's okay. And there will be a bunch more charts that say that. Dollar index. This is important. I talk about this a lot. I pay attention. I really thought, I was like, I had to turn my mind. I'm not bearish, but I expect a downward resolution at some point. It could be a year, could be tomorrow. I don't know. When we were pushing above here, I was asking a lot of questions. This broke on Friday, and it was almost, I don't want to oversay it. It was largely a result of U.S. and Japan joint intervention in the yen. That has a lot to do with what happened right here. And again, I'll get into that in a minute. But this breaking back down, that's interesting, and this puts this 15-year trend line back in play. And we broke, we held. That's almost a month consolidation there, and then we rolled over. That is very interesting, and we have to keep our mind on it. I get into the yen in a couple of charts. Here's rates. I have good friends, colleagues, I think a lot of, who talk a lot about rates, and they're jumping up and down. I'm like, look, it's not broken yet. We've been there not that long ago. We've been there a little longer ago. Yes, we've seen this before. And, this looks the same. If this breaks out, it's going to be a huge problem. But we're not broken. So it could do this. It could do what the yen did. Excuse me, the dollar did. It could do this. I'm absolutely watching it. Everyone should be watching it, but we're not there yet. I can't emphasize that enough. Okay, overall view. This is where I sum up kind of everything. This is a very important line. We held, we're testing. I kind of think we're going back to old highs in the very near future, in a few days. That's not a huge move from here. That's just basically what happened on Thursday. And then this is just another view of the NASDAQ. Look at how big this is. Test, 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 break, now testing again. If we accept back above here, we're going right to old highs. If we don't, then there's a pretty obvious target. And they're very different outcomes, and I don't have an opinion on it. I'm waiting to see. I really want to see how we open. I really want to see the first couple of days. All right, let's spend a minute on the yen. This is okay, 2021, 2022, we really had this move. I think, yeah, this is where this really hit equities hard when we first really went like this, and it was because the carry trade was getting unwound. People are much better positioned for it. We don't get the same linear impact on our markets, but we had joint intervention that we haven't had in 30 years with the U.S., selling euros and buying yen to do this. And this is all we got. When I say break, I don't mean break down like this. I mean break like this. And if we can't get follow through and this come down, we're going to have a problem. The yen is very important in global markets. So I say back burner for now because they're working on it, they're hitting on it. But there's a very obvious level. If this does not sustain lower, we're going to have problems in the equity markets. Be ready for it. I don't know how to be more definitive than that. This has to follow through lower. So keep this on the radar screen. I don't think it's a problem. We're on top of it, or the governments are on top of it. And if this continues to work our way down, then everything will be okay. We've had this move without any problem in our equity markets. So, but if we can't get it under control, it's going to be a problem. So put it on the radar screen. Apologize for repeating myself. With this backdrop, this looks fine. This looks great. Okay, yeah, we had a down day on Tuesday? So what? This looks great. Russell 1000 growth. This low volume area did a lot of work as support. This is much more correlated to the NASDAQ. This has all the high flying names. Yeah, it got hit, but it's been great. The market is rotating towards value names. Financials, industrials, and healthcare look great. Tech is still doing well. Tech is still a leader. You still have to follow the NASDAQ and know what's going on. But the overall market looks pretty good. It's hard for me to get bearish. I historically I'm not bearish, but I do get a little bearish too early. This is one of the reasons I do this exercise, is to really look at things and ask myself, well, how does it look? And things still look good. This doesn't look bad. Okay, it came in, tested support, all that. That's fine, but we look okay. I want to take just a second and talk about these high volume areas and how important they are, because oil is going to come up in a minute. And look at this. A couple of weeks ago, I think I wrote, if we can accept back in this high volume area, it's going to be great. And as you can see, we kind of pushed in, rolled down, and then as soon as we accepted back in, bang, we went flying through it. So that's, I think of these as like magnets. It kind of repels this area and attracts this area. And you can see, as soon as we accept it in this area, bang, we start running up higher in there. So, and this is China, which is obviously very important. And it's, again, everything looks okay. We accepted back in this area and go flying up there. It's hard to get bearish. EEM, this is Korea, which I don't know if people read about what happened in Korea last week. If you didn't, you really should. Taiwan, semis, very important. And okay, yeah, we pulled back, but it looks okay. This is not broken. This is not a problem. Yeah, we had a pullback, no big deal. Breadth, this looks great. This is like, 56% of them are above 200 days. We've been like this. How much has the market been up in the past 3 or 4 months? We're ripping there. Everything looks fine. This does not look concerning to me. This is interesting. A lot of volatility. Look at this. We have NVIDIA down 3%, Apple down 7%, Microsoft up 22%, Google up 11 and change, Amazon up 17%. This is disparity, which I want to highlight. And I assume that him selling whatever, a $40 billion portfolio impacted this. Shouldn't, but it did. That's what's going on. Okay, utilities, really, some of these smaller, they pulled back. But overall, this is just a volatile week, a choppy week, but not a problem. A lot of things are really strong. There's nothing I look at it like, oh, this is bad. It's just like, okay, kind of interesting. All right, let's talk about crude for a minute. This right here, I just want to highlight how important these levels are. I haven't touched these lines in months to years. These are very long-term levels, and oil is really respecting them. And then this is the high volume area that I just talked about a moment ago with the FXI. Look at this, pulled back, low volume area, didn't quite get there, but kind of got there. Stops right there. It's tested here. I said if we can accept it, it goes right there, and we're back in the middle. This is no trade zone. Right here, it's like we're dead smack in the middle. But all I'm highlighting is like, hey, if you wanted to trade this, here are entries and exits. Sorry. Get involved. Get involved. Get involved. Do not touch it right here. But very interesting, and I don't have a longer term conclusion, but I am bullishly biased on this. It's just we had this pullback. I wish I'd done better down here, particularly with this one. Come on, what kind of a trade did I miss there? Really mad at myself, if you can tell. Natural gas, yeah, we're pulling back again. High volume area. It's been here for a while, but this is a huge change in character. Wait till the shoulder season in September, and we'll see. But I think there's going to be a trade coming in this. Again, gold. This is not a good formation, but it seems to be holding it well, and I am bullish on gold. I'm trying not to let this bias me. This is what I'm looking at. If we break down here, here's the obvious target. I don't have a position. I don't get long things like this. I tried it once back in here somewhere, value buy. I can't remember exactly where. Right now, I'm just waiting and watching. If we can break higher, I think we'll rip. If this holds, this is decent support. But if at the same time, if we break, that's where we're going. So a lot going on, and particularly relevant in what I said about the dollar. Huge intervention weakening the dollar with no response. I don't just look at the fact that the dollar is weakening. I look at how gold responds when the dollar is weakening, and it didn't. So that to me is telling. Keep that one in mind. Bitcoin, there's just not a lot going on. This is how millions of people were buying Lambos. Where's the Lambo? And this is 2 months now with very little volatility. There's just not much to say here. There's not much to discuss. Energy, intermediate time. If we zoom out, and I wish I was set up with my screen, I could show you what the longer term charts look on this. This looks like financials or industrials like 6 months ago. Energy looks great, and oil is obviously firming up, as I just mentioned. We can see this. Valero, which is just my proxy for the refiners, looks really good. I know they're making a ton of money there. A major, and then XOP. Look at energy charts. I'll just stop there. Semis, okay, we know what happened. This is where literally almost to the moment where Leo got liquidated, and we're getting a bounce, and I would assume we're going to continue this rally. But again, this is going to be highly correlated to the NASDAQ, which could roll right back over. This is a function of China. China's firming up, and that's great. IGV, the software, everyone's worried about Microsoft. This is Microsoft up 21% a week. And XLK overall. Okay, little pullback, but overall healthy. And then the other sectors, consumers fine. It's not great, but XLV looks good, and which is it? Industrials look amazing. This is too short a time frame for it, but zoom out and look at the XLI, and XLF looks good as well. So it's I keep going, like, for me to be bearish, I need some confirmation, and I'm not getting it anywhere I look. This is a very important chart that I don't talk about much. I'm going to take just a second to talk about it. This is 2009 low, and the channel we've been in ever since we, broke out of it. This is COVID. This is the overaction coming back the other way. It respects this so much. And we're right here. I think there's room to the top of the channel. This is where I'll, be taking profits and things like that. But we've been ripping for a while. NASDAQ has worked really well. Look how well this channel works over time. And we pushed out to the top, breaking back down in. And believe me, I wasn't talking about it much, but I'm very much paying attention to this. This is a logarithmic channel, meaning it incorporates compounding over 15 years off the 2009 low. And if you went back 100 years, it's not this steep. This is an accelerated slope channel. We're growing, we're making a lot of money, margins, everything. We can talk about that. But breaking back down, and we rallied. We're just about here. This is a very interesting chart. We don't need to spend a lot of time on, but just keep it in the back of your mind. And then small caps, again, same thing. These charts work really well right here, and we're right smack in the middle. I think small caps are the place to be going forward. We're not rotating away from NASDAQ. NASDAQ is still leadership. But I want to wrap up there, or get close to wrap up. NQ for tonight, for tomorrow morning, it's the most important chart in all of equities. If we can get through that 28,530 level and accept back higher, I think everything's bullish for the immediate future, next couple of days. I'm calling it the line in the sand. It is a very important chart. And rates and oil and Japan all need to be on your radar screen. I'm pre-recording, so I know we don't have any questions unless Marlon wants to chime in, ask me to clarify anything. But just wanted to say thank you, good luck, and this is an interesting week. Keep everything on mind, and if you ever have any questions, drop them in the swing room at Mr. Topstep, and happy to respond. In a couple of weeks, I guess right after Labor Day, we're really going to ramp things up and try and get a little more activity going on. We're getting ready for prime time and coming along. I appreciate everyone who's doing it with us. So again, I will stop there, say thanks very much, drop any questions, and good luck.